Street, just coming live because I just felt the need to, um, you know, go live after such a great day we had in the stock market, right? Uh, it was one of those that we actually were expecting. And I have to say that if you are on the Discord with me, or if you happen to catch these lives, you know that last time I made a video, um, people usually ask me, when is it the best time to get in the market? When should I start taking a position? What stock should I buy? And although that's kind of an unfair question because nobody really knows, I did say right now is the best time to get in the market. And I said that I believe on when went live on maybe Sunday, and I did make a case that we were definitely in oversold territory, and it's one of those things where if you decide to kind of take what I say with a grain of salt, totally fair, right? But it happened. It, you know, in over history, right? The best times to enter the market, you just can't time. You just have to have time in the market. And anybody that knows me knows for a fact that whenever I say time in the market will always be timing the market, this is exactly what I mean. Days like today. I think today was probably one of those days where we haven't had a day like this since 2008, which means that if you missed today, which was one of those days that the stock market just ripped, I think trillions of dollars went in. People took positions, other people pivoted, but a lot of money went into the market today. We were definitely in oversold territory. Everything was screaming that. I had been selling cash secure puts for, I don't know, the last 2 weeks, 3 weeks, like crazy, and it panned out. Um, I just, I hope that you guys join me in the action and decided to take a position, whether it be through cash secure puts, or you went and nibbled a little bit onto, one or two different stocks that you guys have been looking at. I think that that's actually something that would have been good for you because you would have entered the market in a really good time, and you would have, easily made 15, 20, 30%. And so it is what it is. But if you want to keep on right now, it's still a good time to basically try to get into some other positions and try to see what the stock market gives you, because I think that right now everything's in flux, but there is still time to actually make the best of it, right? Because I think we're going to go down. We went up too fast. However, beautiful day to sell cover calls. What do we got here? We got Anna Perez saying hi Anna, how you doing? Kaiser and Koi, hi. Honesty Bingham, what's up, buddy? Thank you for watching, guys. So again, if you really want to make some serious money, right? If you want to generate this type of generational wealth, days like these are the ones that help you position yourself better. Personally, I think my portfolio went up 13, 14% because I was not overextended in any one specific stock. However, it's beautiful to see your portfolio go up 13, 14%. I'm telling you right now, because everything went up, right? The companies that I've been looking at, and I'm, basically, I'm in, are NVIDIA, Tesla, SoFi, Unity, C3.ai, RXRX, Microsoft, Google, Amazon. Um, Let me see. Missing a few. Uh, Ion Q. Um, Let me see. I'm forgetting. I'm forgetting a lot of them right now. I'm in Lucid. I'm in Rivian. Um, AAOI. I mean, there's just I'm holding positions in like 20 companies at this point, right? And every one of them had an amazing day. I also hedged. I went into SOXL, and once it went up, to 9, I sold some, and then it went up to like 12 something, and I think I sold at 12.41. I sold the rest, and then when SOXS was down, that's the semiconductor ETF bearish. Um, I went in and I bought a 20. I think I bought a 20 something, and I bought a 22 and a 20. So that's how you hedge, right? That's basically saying I think we personally went up too fast, and now there's room to come back down. Now that's not saying that tomorrow we cannot go up. We definitely can, right? But I don't think we're gonna have a 3,000, 4,000, point in the Dow day like we did today. And so I don't know. You guys feel free to ask any questions, because usually I talk a lot, right? But I just give you kind of my outlook on the stock market, and basically the positions that I'm holding. This is not financial advice by any means. This is pretty much for educational purposes, right? And I'm just basically trying to become the channel that I wish existed when I started investing years ago. And so, I'm not a huge channel. However, if you guys could give me a thumbs up, leave comments, definitely look forward to seeing what you guys have to say. Or if you guys have some comments or questions, we'll see what we do. Anyhow, let's see what we have. So Unity ripped for almost 20%. I think it was at 16 at some point, and I was pounding the table. It's a great company. They are generating positive revenue. It's one of those companies that I firmly believe is going to go to $100. It's just going to take time. If you're in the stock market to make a quick buck, if you're in the stock market to just see what the hot stock is and try to YOLO, you're in the wrong business, man. It's not going to happen. The chances for a company to rip and short squeeze are very, very small. And the amount of research that you have to do, kind of like a Roaring Kitty, he was an expert at GME. He knew exactly what he was looking at, and he knew exactly what was going to happen based on all the data. Numbers don't lie. However, they can be suppressed, and so you have to then take into account that there's so many variables that go into go into like a position, into a company short squeezing. And I don't think YOLOing is actually one of those um, sane and logical tactics, right? But if you are taking an approach where you're going to slowly but surely build a portfolio, a very strong portfolio that is going to grow, and you're willing to give yourself a few years to become wealthy, that's the approach you have to take. Now, I'm not saying you're going to become wealthy like from one day to the next or in 3, 4, 5 years. No, it's you have to work at it, and you're going to have to invest, right? That's why it's called investing. You're going to have to invest time and your resources. But the more serious you take it, and the more that you educate yourself on the variables that can affect the market, uh, the more chances you'll give yourself um, to have a positive uh, portfolio, to have a positive experience, and to grow year over year. And that's basically what the stock market is. It's something that compounds, right? And that's how you make a lot of money. But I don't see someone, unless they get extremely lucky, buying $1,000 of a stock, and then the next day they become a millionaire. It just doesn't work that way. Um, so uh, that's why I made this channel. What do we got here? Let's see here. Ernest Bingham. Yeah, hello. With his stunning shades on. Preview with the option. What up, photo? The Savage with his stunner shades on. Yeah, man. You know, it's really bright in here, and so I had to put them on. Um, gonna go live probably for like 15 more minutes, and then I'm done. I just wanted to talk about, the positive day we had today, and like you say, did we fill our pockets today? Sure, we did. We sure did fill our pockets today with tens of thousands of dollars, may I add. And it was so beautiful of a day. Now, what to expect tomorrow, man? We don't know, right? Right now, the pre-market, right, has us in the positive, but we don't know what's going to happen overnight. I think we're going to probably start kind of inching a little bit higher. People are positive now, but I mean, what has changed, right? If you just look at everything that was going on yesterday, it's just been paused. Nothing has happened. Nothing has changed. So, what are we looking at? Well, a lot of stocks moved today 15, 20%. So, what do I do when the stock goes 15, 20%? Anyone that knows me knows that at 10%, that's kind of my red flag, right? Or that's kind of my cue to know that I'm going to sell covered calls. But everything was moving so fast that I gave it time to breathe. However, I did deploy some covered calls. I sold some 120 NVIDIAs for $9, for a couple of months down for premium. I brought in premium. I bought some SOXS, which is kind of a hedge against semiconductors, right? SOXL went up too fast, and I think SOXS came down from like $50 down to 20. So that's insane. That's a big move. When semiconductors have a positive day, that ETF, because it's a leverage 3x, moves three times what the stock is moving, positive or negative. Now it moved down negative so fast in one day. It's a $30 hit. I just don't see it going down, $10 in one day. It could go down a little more, but at this point, that's when I start nibbling, right? And you start averaging down because we're going to have a very red day soon. So we're going to do what? We're going to wait. It's all about patience, folks. It's all about patience. And it's you just have to trust in your research. You have to trust in yourself. And you have to know what you hold, right? For those of you that own NVIDIA, NVIDIA is going to $500 a share. I've said it before, right? If you just watch my stream, you watch my channel, you know that NVIDIA is going to $500 a share. It's just going to take time. Nobody's doing what NVIDIA does. They're leaps and bounds ahead of everyone else, right? AMD. And so, look, NVIDIA is going to $500 a share. It's just going to take some time. But if you bought it, at 90, I salute you, because that is exactly what you do. You start taking chances when the stock has been beaten down, and when it's not something that the company did wrong, right? NVIDIA is making 70% profits. They're going to keep making 70%, 60% profits. It's just, it was overbought. And then what happens? Then you go to oversold. Then you have contagion. Everything else was getting wrecked with NVIDIA. Tesla was getting wrecked. Microsoft, Amazon, Google, Facebook, Costco was getting hit. I mean, Jesus, everything was taking a hit. So it was just a matter of time for us to have a little breather. Now, because we paused, which on Monday we got a little taste of what can happen when we have some good news. That told you right there that we were waiting for anything. We're waiting for any positive news. The stock market is designed to go up. It just is. It has too many tools for it at its disposal for it to go up. It's just a fact, right? Now, thing is, it's volatile. Right now, volatility is kind of the word of the year, if not the word of the next 4 years, right? And we know why. Now, you can either take your, board home and then fold up your portfolio and say, I don't want to play for 4 years and just let it do whatever it does, or you can be proactive and say, you know what, I hold a lot of different stocks. I'm gonna make some income on this because that's what we do as option writers. And this channel is for option writers. You make several thousands of dollars every time you sell, 10, 20, 30 covered calls on, Nvidia, on Tesla, on Microsoft, on Google. Matter of fact, I met a lady yesterday at work, who happens to say that she had a lot of Nvidia shares, and I told her, "You're selling on a gold mine." I'm sure today we exchanged numbers, and I texted her and I said, "Hey, today would be a great day to sell some 120 covered calls," and I put my money where my mouth is. I actually sold the same covered calls that I was telling her about. So, anyways, I generated some cash today. Premium. I have it sitting down on the side because I think, today was an overreaction to the good news that we had. Nothing has changed, and I think we were just looking for an excuse to have a really great day. Now, a 90-day pause, it is a 90-day pause, but we still have so much that can go wrong. I mean, nothing has changed, and we still have just data, raw data that needs to come out, right? Credit card defaults right now are on the rise. Same thing with mortgage lending, right? All the defaults are on the rise. The numbers of those 80,000 federal workers that were fired, all that has to have some type of effect, right? And it's going to be a negative effect on the economy. So we just have to now brace ourselves for what's to come. So what do? Best way you can protect yourself is, now that everything is run up 15, 20, 20, 25, 30%, is now, if you're in a position where your average is actually lower than where the stock is at, or kind of where the stock is at, you can say, hey, I'm willing to sell my, shares of SoFi per se. Right now it's at $12. Say I'm going to sell my SoFi for $12.50 in 6 months, or $13, $14 in 6 months, and take some premium for it. Because guess what? If we go down, right, you're not holding the bag. You don't feel as bad. I was actually making a point when I was speaking to someone yesterday that a lot of people that have all these great companies, right? They have all these different stocks that they own. They've just seen their portfolios evaporate, right? They saw their portfolios evaporate 30%. Some people 40%. It's pretty scary, especially if you're in your 60s, your 70s, right? Or you're close to retirement and you're like, shit, I'm about to retire. And then you're like, I guess not. I'm sure that's a very scary feeling. So imagine if you were to protect yourself and you have, I don't know, a $250,000 portfolio, right? And you're able to take 15, 20% off of that, right off the top. So, that's $50,000 that you can take for yourself in premiums and hold them. And if we go down, and your portfolio evaporates 20, 30%, guess what? You were just protected. You just protected yourself, and you made income on the shares of the stocks that you have, because guess what? That's collateral. So you're basically using your own, your collateral, your shares as collateral, and you're bringing in cash for that you can use right now in an economic downturn, right? So, all right, what do we expect for tomorrow? I see it's a little more positive. I think people want to feel like there's positivity in the air. People are going to take a little more risks. People are going to say, oh, you know what? FOMO is going to kick in. It definitely kicked in today. If the White House says nothing, I think we keep going up a bit. But I just don't see this as being sustainable. I don't see us going up, 10, 20, 50%. The Dow was 47,000 points a few months back. I don't see us getting back there, man. Um, what I do see is a little more pain once all this raw data starts coming in, right? Once the once all these companies start lowering their guidance, right? And once those PEs, price to earnings, start kind of dropping, um, we're gonna have some more pain. I think that companies are gonna start, going down in price and then getting down to like where they should be. Because right now, I think everything's really expensive, and so great opportunity for us to then start averaging down again, right? Once the Dow goes back to like 37,000, I've been calling for that number for like a month or two. You guys can watch the videos; it's there. Once we go back to 37,000, we can start then looking at being a little more aggressive, taking in more shares of the companies that we like, right? So, anyways, I wanted to go quickly in here, man, and just talk to you guys. I've been making videos on try to walking you guys off of the ledge, right? So that you guys don't don't sell weeks back, because everything was telling you to sell. Everyone was telling you to sell. And I think that's the worst thing to do is you want to go through the pain. You want to be an investor, right? An investor needs to have a little iron stomach. So anyhow, I am the Credit Savage of Wall Street. Thank you for watching, guys. Let's see what the market has in stock for us tomorrow, and let's make some money. All right? Remember, cash is king, but credit is power, baby. And that's the way it is.